Welcome to the Startup Grind.
We have Asif Ghafoor of Spacious here with us, so thank you for being here.
Cut myself.
Well, let's start at the very beginning. When did you first know that you were an entrepreneur?
What does that even mean? I don't think an entrepreneur is a job.
Looking back in retrospect, can you look back to like when you were 4 years old and you were already selling stuff, you were hustling, or like?
Well, I mean,
how far back can you look?
I started doing stuff for myself and selling things when I was in high school. So when I was 15, 16, I actually used to build PCs just for fun because that was a cool thing to do in those days. I used to buy parts like graphics cards and motherboards and things like that and fit them all together and sell them in the local neighbourhood. So that was quite good fun.
So that was your first entrepreneurial venture?
That was the first time I ever sold anything that I had done as opposed to a job that I was paid for. Yeah.
Did you even know what an entrepreneur was back then?
I don't think I knew the word entrepreneur, but my father has always worked for himself. And he first came to England, to London in 1975 with nothing. He tells me the story all the time. £5 in his pocket, and he built a company from that.
What was his company?
A real estate investment company. So that's my family business. So he's essentially buying distressed assets, buildings that are in bad shape, renovating them, selling them on, putting them on for rent. So I actually spent a lot of my childhood on a building site. I used to go with him all the time. So he's he's actually a qualified civil engineer. So he knew how to do that. So I think ultimately I always knew I wanted to work for myself. Maybe I didn't have a what's the right word, a title or a name, a label to put on it, but I always knew that was something I wanted to do.
You wanted to do your own thing.
Yeah. I always knew that. I mean, when I first started working after I left university, it was only meant to be a 2-year thing. I was going to just go there for 2 years and just, I guess, see what it was like, and then quit, and then start my own company. And then in the end, I ended up working in banking for 11 years.
11 years. And that was with who?
So the first 8 years were with Goldman Sachs, and then the second 3 years were with Standard Chartered Bank. So the first 6 were in London. They relocated me here. I worked for them here for 2 years, and then Standard Chartered Bank for 3 years as well. So in a lot of ways, that period in banking, for me, looking back on it, was almost accidental. It just kind of kept going and kept going and kept going. It wasn't something that I'd planned to do. So
then how did you escape from the corporate banking world? Like, what happened to inspire you to get started on your own thing?
So one of the, I don't want to talk about this too far because this is not something that a lot of people are interested in, but there's been a lot of changes in the banking industry in the last 7 or 8 years. I think you're starting to see a lot of people leaving the industry because since 2008, 2009, the financial crisis, the ability for people within banking organizations to be creative and entrepreneurial is less. There's much more focus on controls and regulations and making sure that people are following the rules and no one's kind of doing anything too creative. Creativity equals risk equals bailout. So it's just a lot harder. I mean, when I first started out in banking, it was actually quite an open environment where I was given an enormous amount of freedom. But over time, that diminished. Some of that, I think, was a function that I was actually doing a more senior role. When you're in a senior position, it's harder to be creative than when you're in a junior role and you can kind of just get on with it. But it was also, I think, the general environment as well. So for me, I want to be able to turn up to work and get things done. That's what drives me. That's what gets me out of bed in the morning. Not, what's the right word? Getting titles aren't necessarily that important to me. As just feeling like we've actually accomplished something. I've actually got something done.
So when you started looking around and thinking about doing something, was Spacious your first idea, or?
Yeah, pretty much. I mean, there's such an old cliche that when you think about starting your own company, the best place to look is with problems that you have yourself, right? And anyone who's looked for an apartment in this town will speak to the fact that it's not easy, right? So that was a problem that I had personally experienced myself. It was an area that I knew a lot about because of my personal background. I've always had an interest in real estate. I'm one of these people who loves to just look at property online all over the world. Always use Zillow, Zoopla. So for me, it was actually just one of these weird situations in life where a bunch of things came together. I wanted to do something different. The problem space that was out there was significant and important enough to worth tackling, and it was an area that I actually knew something about. So it was just almost like a convergence of a bunch of factors that came together for me personally. So
how did you get it started? What were the first steps, and how did you make that leap from banking?
Well, for me, I found it. I actually found it very difficult to try and work on it on the side, which is, I guess, the option that everybody kind of wants to try and do. Just because, mentally, I couldn't give it the focus that it needed. I mean, there's. I think one of the things you realize eventually is, doesn't matter who you are, every individual has a limited amount of creative energy in them in a given day, and once that's gone, that's gone, and you can't just, what's the right word, make that up, right? So you've got to conserve your time, you've got to conserve your energy, and all of these things about surrounding yourself with positive people, positivity, and so that you're getting energy back from people instead of people taking energy away from you. So for me, I just felt like the amount of energy I was giving to the company, I just didn't have anything left at the end of the day. So I was in a fortunate enough position financially where I could resign and give it a lot of focus, and that's what I did. So, and for me personally, I mean, obviously, different people have different circumstances. That was a good way to do it.
So what were the first steps then? I mean, you had this idea. You said, I need to build a website.
Yeah.
How'd you go about starting this?
The simplest thing to do, I mean, I guess with me, I was fortunate enough to have come from a software development background. That's how I started out when I first started working at Goldman. And so I just went ahead and built it. And just turned it on, and it was pretty much being held together with rubber bands, the first version.
So it was an MVP?
It was a very basic MVP. It was rubber bands all over. And the funny thing was, even on the first day, we started generating inquiries for agents, and it was just like, wow, okay, this is quite exciting.
So you got validation real quick.
Oh yeah. I mean, but that's, for me, that was what I was doing in banking as well. So in a funny sort of way, that way of operating was very natural to me. So my background within technology in banking was in front office technology, right? So that's kind of that's the part of the technology organization which is essentially working very, very closely with the various trading desks. And the way you operate in that type of environment is you need to be able to get sponsorship for your projects from senior managers on the trading desks. And the way you do that is you build something very quick and basic using an Excel spreadsheet if need be, show them the functionality, get the budget, and then build it properly, right? And that was essentially what I was doing for 10 years. And so for me, it was actually just a very natural continuation of my previous job. So I guess maybe I was lucky in that sense.
That's interesting that the banking world trained you on lean startup methodology.
Absolutely, yeah. No, absolutely. I mean, I think that's in that specific aspect of technology within banking, you have to operate like that because what's the right word? The requirements themselves are changing with the market. The market changes quickly. There's different situations in the market that may be profitable now, but they may not be profitable in a week or two. So you need to just be very reactive. And so functionality matters more than whether the product or the technology is technically correct. And that's, some people see that as hacking, other people see that as being commercial.
So you launched this, you got your MVP, your rubber band version together.
Yeah.
You start getting people signed up, they're actually using the website. And then at what point did you say, I should go raise some funding for this, I should turn this into a bigger deal?
So the two kind of benchmarks that I had in my mind were, first of all, I had to have the product live, right? So the website needed to be live. It needed to be, still being held together with rubber bands, but it needed to look like it was the real deal. And the other piece was some validation around a month-to-month growing user number, right? So I wanted to have, say, I think at the time I said 3 consecutive months of user growth. So that was a target that I set myself, right? Totally arbitrary. And we got that pretty quickly. So, I mean, we launched the website in August 2013, and we were able to close our seed funding round in April 2014. So we raised $500,000 US. So we were able to get things done pretty quickly. And I think that, one of the things that really, made people come in was the fact that they were able to see us get to that point on a shoestring budget. And me plus half another developer, right? So we were able to get to that point. And I think that was just quite impressive for a lot of people. And that's what I wanted. I didn't want to have to talk about the fact that I have a technical background and I can do things. I wanted to show people.
Hey, I did this.
Yeah, that's it. It's done. I don't want to talk about it. It's there, right?
So then at what point did you start going after your next round of funding where you said, I need more, I need to grow this more, and I need more funding to do it?
2 big milestones. I think once you get past that first funding round, the second round, I think in the current climate, especially in a place like Hong Kong, you definitely need to be able to show some revenue, right? So I knew we had to show some revenue, which we were able to show, and I guess from a product perspective, we definitely needed to get our mobile app up and running in an effective way, show some traction around that, but also specific to our business, the other, I think, big hurdle for us was when we first launched, people saw us as an expat platform. They looked at me, he's an expat, right? They looked at our product. Oh, this is never going to work for Chinese people. It's far too slick. Chinese people love crap websites. That's generally the feedback, right? So being able to cross that barrier and show that, hey, look, this product works across segments was a challenge, was a big challenge. And by the time we actually raised the next round, we actually had more traffic, and we still do, more traffic combined in Chinese, simplified and traditional than English. So I was able to demonstrate that and say, hey, look, this is not some expat website. This is a website for the whole market. So those were some of the big things that I knew we had to accomplish.
And so this latest funding round, when did that happen again?
June last year. So we raised $3 million US. And
how did you get connected with that investor?
So I don't know if you can call it luck, or maybe I'm not giving myself enough credit. But actually, what happened was most of the money in the second round came from investors from the first round. They basically just gave me more money. They said, hey, we like what you're doing, and we just want to give you some more money.
That's good.
Yeah. So, I mean, they were happy with the way. So, in the initial seed funding round, I basically had 10 guys coming in at 50K each, and 3 of those people were family offices. So, from their perspective, they're spending 50K on lunch, and so it was essentially a call option. Right? So we pretty much had a gentleman's agreement where we said, hey, if things work out, we're kind of just dipping our toe in the water. But if things work out, we're going to come in a big way in the next round. So I pretty much was able to agree some very high-level KPIs with them. Nothing written down on paper or anything like that, but just a verbal agreement where if we hit those targets, they were going to come in again. So it was nice because I knew by the second round, by the time we got to the second round, I'd built a very strong relationship with them. So I knew who they were. I knew how they operated. There's always the kind of feeling out process where you need to understand how people want to be communicated with. So all of that was. So it was actually a really easy transition to just go through the round, and pricing it was not that difficult either. I mean, we were able to come to an agreement pretty quickly. Yeah.
Cool. So once you raised that money, what changed for the business? I mean, what really substantively changed?
So, I mean, look, for me, because of my previous experience in banking, I've had to build several teams from scratch, right? In my last job at Standard Chartered Bank, I had to build a technology team across Hong Kong, Singapore, Seoul, Mumbai, and Tianjin, right? So I was flying all over to building that technology team and hiring people. And the one thing you learn every time is the biggest mistake you can ever make is to hire too quickly, right? Because a couple of things tend to happen. First of all, the culture that you have as a startup, right, which you kind of is a hard-earned culture because people learn to make things happen on a shoestring budget. That culture gets diluted because the new people that come in can't be assimilated into that quickly. If you double the team within a short period of time, then the kind of the hard-earned efficiencies that you've gained as a company are lost. And actually, that's your biggest asset as any startup. That's the biggest asset of any startup. So hiring too quickly is a very big mistake, I think. You need to hire at a rate that means that the new people coming in are able to assimilate into the existing culture. Right? So I knew that, so I deliberately did not hire quickly. What else substantively changed? I guess the one thing that did increase was, one of the things any startup is always doing is testing marketing strategies. Which marketing strategies are working, which marketing strategies are not working. The ones that were working, we were able to scale those up. And when I say working, around each marketing strategy, ideally you'd have a set of metrics defined as to how you measure it in terms of cost of customer acquisition and cost of customer lifetime value and all of that kind of stuff, right? So we were able to scale up the marketing side, but in terms of headcount, I deliberately took my time, regardless of what anyone says. Any pressure from investors and all this kind of stuff, because, as I say, for me, the most important asset that any startup has is that hard-earned culture that the early employees have of knowing how to get things done on a shoestring budget.
So one of the questions I think a lot of people have is, well, how is Spacious really different from the real estate portals that are already out there? We've got Square Foot, we've got these others.
Sure.
What sets Spacious apart from them? What are your big differentiators?
Sure. So for me, I mean, not just in Hong Kong, but looking across the region, there were really three problem areas that we were able to identify. The first one was user experience on web and mobile. In general, if you look at the portals that are there right now, the user experience is terrible, right? There's outdated websites. Pretty much all the websites have a lot of fake listings. They have a lot of them have very little quality control around the information that's actually posted on the listings themselves. A lot of them are missing, information around bedrooms or floor area or whatever. The pictures themselves are not very good, right? So in general, the end-to-end user experience of these websites is not very good. And that was based off a lot of feedback that we got. The second piece that we're very focused on targeting is a lack of market transparency, right? So one of the big issues with the real estate market in this part of the world is a lot of the people that are, shall we say, entrusted with providing color on the market, they are not independent, right? So if you look at Hong Kong, for example, historically, the people that most people would think to ask about what's going on with the residential prices is someone like Centerline, but they're an agent, right? And they're paid based on percentage of commission. So what are they going to say? Prices are going up, right? So we are positioning ourselves as an independent market data provider around the market, not just in Hong Kong, across the region, allowing people to somehow, I would say not somehow, but provide a standardized benchmark, right? So we can compare apples with apples across the region, but also within the city itself, have a better idea of what's actually happening with prices. Are they going up? Are they going down? And other questions that people care about, like, for example, in a specific neighborhood, what's the demographic makeup of the people that live there, right? What are their first languages? another question that a lot of people think about is haunted houses. Are there any haunted houses? That's a big factor in determining house prices in the city.
Really?
So how do we answer the questions that people care about around pricing, around demographics, and all those other things through data, rather than forcing people to have to rely on real estate agents who are not independent?
Okay, sorry, I've got to ask about this haunted house thing. This is new to me. I didn't realize this was a thing here in Hong Kong.
Yeah.
How does your portal serve people who are trying to figure out if a house is haunted or not? Is this like a check mark?
Yes. Yeah. It's actually.
Really?
It is. It's actually an interesting.
So if I want a haunted house, I can like filter and.
Absolutely. Yeah.
Sweet. Are prices lower on those?
So you know what? It's not an exact science. It depends on how you interpret a tragic event. The classic example is, if somebody jumps off the top of a building, does that mean all the apartments in that building are haunted? Who can say, right? So, there's actually legal implications to this as well. So you've got to be a little bit careful, because there's been historical scenarios where some people have tried to reduce the price of a flat by spreading rumors that there's a particular apartment is haunted, and then there's been all kinds of legal back and forth involved in that. But in general, I guess within Chinese culture, there's more of a culture of superstition around apartments that maybe the right terminology have had a tragic event, an unexpected death, and then the theory is that apartment, the ghost of that person is still around there, and you don't want to live there, and then so it does actually impact house prices. I think. Maybe. Is
there some entrepreneur who has a service for like getting rid of that, like Ghostbusters or something?
You know what? It's not an exact science. It's not an exact science. We basically show you for specific buildings. Has there been an incident in this building? How you interpret that is up to you. So we don't say, we don't try to be more specific than that. Just try and stay clear of any legal issues.
That's interesting.
Yeah.
It's not just an Asian thing. My parents actually bought a house where the previous owner had passed away in it, and nobody told them until after they bought it, and then they found out. So
I wouldn't have an issue with it. I mean, I don't mind. But anyway, whatever. That's just me.
Yeah. Anyway, that was just interesting. You said haunted. I had to go down there. So, man, where were we going from there?
Ghostbusters.
Yeah. So, with Spacious, what are your plans then with this? Because it's not just Hong Kong, right?
Sure. So the use of funds around the second funding round was to accelerate the growth of the business in Hong Kong, but also set up the business and accelerate the growth in Shanghai, Taipei, Shenzhen, and Beijing. So we're actually live right now in Hong Kong, Shanghai, and Taipei, and we're about to launch in Beijing and Shenzhen.
How's it going in those markets where you're already in?
So there's definitely quite a bit of, I would say, localization that we've had to do. We're still doing, as we get feedback from the market. It's not just as I guess it's not as straightforward as just taking the product from here and sending it there. So we've got a team on the ground in both of those cities.
Well, especially China. I mean, you have to deal with regulations and stuff there too, don't you?
Well, not really, because we are not an agent, right? So we're not actually selling the house directly. From a business model perspective, we're actually a marketing platform, right? So we're helping agents and landlords market their inventory in an effective way to people who are searching for it. So if you're involved in the transaction itself, then there's definitely quite a few more things that you have to do. So with us, it's just a lot cleaner when you're kind of in that space, and it makes sense from a business model perspective, right? Because I think the whole point of the internet is, so we say internet businesses is, companies are focusing in on a narrow piece of functionality, which they can be competitive in because of a scalable technology solution, and then you're scaling that out, right? So we don't want to be in a position where we're trying to own the whole transaction, because there's people out there who are better than us at sourcing property. We can do that more effectively than an agent, right? And there's people who are better out there at negotiating the prices. We're not going to be able to be experts in that. But what we can be really good at is the search piece. So focus on a narrow band of functionality and then try and scale it out across a wide target addressable market.
So have your competitors responded since you entered the market? Have you noticed them making changes based on what you were doing?
I'd say so far the main place is Hong Kong actually. So there's definitely a few functions that are popping up in some of our competitors where seen that before. So, but that's okay. That's okay. I actually find that quite amusing because those guys are part. The main guys we're competing with here are part of larger conglomerates, and their ability to keep up with us is very, very limited. So our ability to just get things done, by the time they catch up with our kind of 2 iterations ago, we've already released something new. So it's actually just funny to see them trying to catch up. I don't know.
That's another form of validation too, right?
Oh, fantastic! Yeah. I mean, I don't know if I should be happy or sad about this, but we actually just hired somebody from one of our competitors, and they told me that the general manager at that company has got a dartboard of me in her office, right? So
that's a form of flattery, I think. Or...
That's a little bit scary. She actually just sent me a LinkedIn request, so I don't know if I should accept that. I'm not kidding. That's true. So that's quite funny. But,
that's great.
Yeah.
So do you have more funding rounds in the works then? Are you looking for the next one already, or?
I think once you get to a kind of a certain point, you're always having conversations about fundraising. It's just a kind of a 24/7 thing, and but I mean, not just with new investors, but also existing investors, right? They want to say, hey, how about you get some more money here, and then it's the thing that's difficult, of course, is agreeing a set of terms that would work for everyone. So, getting people interested is not necessarily the problem. It's actually just agreeing the right terms that would make sense. Because, I guess when you kind of get to the point that we're at, it's not just my decision anymore, right? It's just inevitable, right? You have to give away some element of decision making, or shall we say, be more inclusive in your decision making. So, no, I mean, look, the startups funding scene is, I think, quite vibrant. 2016 is, I think, an interesting year when it comes to fundraising compared to 2015 and 2014. But there's still a lot of people out there that are interested in getting involved in this space. I mean, not just in terms of private investors, but also institutional investors, right? I mean, if you look at the IPO pipeline, right, which is traditionally what's kind of fed large banks, that's not great right now. So a lot of them are coming down the food chain to try and find something, right? So we've been invited to investor lunches at a couple of banks, where they want us to come in and sit down and talk to their clients. Even 5 years ago, would they have been talking to a startup like us? Probably not, because they'd been some other cable and wireless type company to take IPO. So I think the general environment for startups is pretty good. It's a good place to be. And the other thing I think we have going for us is, if you think about Asia, and you think about asset classes that people care about, real estate is pretty much at the top of the list, right? People care about real estate a lot. For a lot of people, it's an inflation hedge. So I think we're a business that a lot of people can understand. It's not something about giving gifts to each other on Facebook or something like that. It's a real business that people can understand. They know what real estate is.
No offense to those gift-giving businesses on Facebook.
No. I think I know most of the people here. No one's giving gifts on Facebook. But it's a real business. So it's something that actually it's not that difficult for me to explain what it is we're doing, which is helpful. Yeah.
So talk a little bit more about the startup scene here in Hong Kong. We've talked about this a little bit before. How do you feel like it's progressed over the years since you started your business?
Sure.
From where it was, say, 3 years ago to today, in terms of quality of investors, support, the startups themselves?
Sure. So for me, I've got a slightly different perspective on it from most people because of my own background, right? Having come from software development and that kind of stuff. if you look at startup fundraising in Silicon Valley, right, it's pretty much unheard of for startups to raise money there without having some type of technical DNA, right? So if you're there and you know, hopefully I'm not offending anyone here, but you know, that's investors, sophisticated investors in Silicon Valley. They won't invest in companies that don't have an ability to deliver on technology, right? And one of the things that I was quite surprised about when I first started this company back in 2013 was actually there were a lot of people in this part of the world raising money who just knew nothing about technology. They had no appreciation of technology, even though that is ultimately what it is you're building. And you know, they were able to sell this story that they were just going to hire this tech guy in India who's going to build their platform for them, right? And they were just going to raise lots of money. And there were people raising a lot of money. For me, that was a sign of a very immature ecosystem, right? I mean, even if 3 years ago, I think even if you went to London, you could have probably still got away with that. Last year I went to London, all of my friends told me the same thing. If you don't have at least one of the founders being a technical guy, you're not going to raise any money in London anymore, right? So for me, that is how I personally measure the maturity of an ecosystem in terms of what people can get away with from fundraising, right? Because basically Silicon Valley is the model and you can't raise money without at least one of your founders being a tech guy.
Yeah.
Right?
Well, you think about the background of Silicon Valley, I mean, it came out of hardware and sophisticated software, Oracle, and these type of things, so it's natural there.
Yeah, so, and one of the reasons I was able to raise money, looking back on it, was because people saw me as, you know, as basically fitting that Silicon Valley template, right? Even though I was a sole founder, I had things going against me, but because I knew the tech piece of it, that was more important, right? So I was quite lucky to get, I would say, knowledgeable investors from my perspective. So I was happy about that. Yeah.
Cool. So let's talk a little bit about real estate here. What's going on in the real estate scene? What data do you have available? Like, what can you see that other people can't see because of the data you have access to?
So I mean, there's some interesting things going on. So I think in general there is a downward trend. So anyone who's kind of living in Hong Kong right now, I think you can definitely get a good deal on your rental if you're negotiating your rent. The rentals, the peak of the market was probably September, October last year. Since then, the rentals on average from a listing perspective are down by about 10% in most areas. Bigger drops on the higher end of the market. Sale prices are also down. We've actually called 20% down in 2016. And you know, the big drivers of that on the rental side, unfortunately, there are a lot of people losing their jobs in the finance industry in this city. Hong Kong is very, very finance driven. And unfortunately, you know, the demand side of it is kind of coming off a bit. On the sales side, the government's actually put in place a lot of cooling measures to bring the prices down. So that's kind of the macro picture there. But in terms of what we're seeing on the site itself, there's two, I guess, because the prices have been so high, everybody knows renting in Hong Kong is very, very difficult. We're actually seeing more English language searches happening in Kowloon, New Territories and the islands than we are in Hong Kong Island in the second half of 2015, proportionately to the first half of 2015. So actually there's more English language searches looking for property further out.
So people are moving off the island.
Yeah, I think people can't, the prices are at a point where it's just very, very difficult for a lot of people to live here. And I think the other thing is there's a lot of gentrification taking place in certain areas. Like if you look at West Kowloon, you know, that's a great place to live now. And there's the whole Elements Mall and all that kind of stuff. The two areas on Hong Kong Island that are actually bucking the trend in terms of search data, Kennedy Town, which is a great neighbourhood. If I was moving to Hong Kong right now, I'd want to live there. And then right on the other side of the island, Sai Wan Ho, which is, I'd say, the cheapest place that you can live within an easy commute of Central. So 5 years ago, if you were looking for that kind of, shall we say, those parameters, you'd be looking at North Point, but North Point has actually gone up in price a lot. So now it's Saibai and Home. So it's interesting. It's interesting, and I mean, look, from a marketing perspective, these kinds of things really help to show people the value of any platform, right? Because in any platform, there's always some element of proprietary data which people want to try and understand whether you have that or not. And so from our perspective, us being able to show that we've got this search data which is giving color on the market, that's quite useful. And that's something that a lot of people have shown a lot of interest in.
How much of an impact does mainland China have on the real estate market here these days?
Big.
And what's the trend there?
Yeah, big. I mean, the residential market, historically, a lot of people have seen Hong Kong as a safe haven for parking their money. That's not necessarily the perception anymore. I think it's become clear to people that Hong Kong is ultimately going to get folded into mainland China. So a lot of that money is now moving towards buying property in London or Australia or the US or Canada, something like that. So it's definitely had a big impact, which is once again why on the higher end of the market you're seeing the bigger drops. But the story from a real estate perspective, which actually I find really interesting and not a lot of people are talking about, is actually more on the commercial side. Commercial rents in this city have plummeted in the last year or so. It's to the point where the government actually changed the definition of a couple of things. So the big driver on the Kowloon side, for example, behind commercial rents was an enormous number of mainland Chinese tourists coming to Hong Kong and buying things. If you look at the last Chinese New Year versus the previous Chinese New Year, the numbers were about a quarter, right, of what you'd typically expect. Anyone who was around using Chinese New Year, it was pretty easy to walk around. It wasn't the normal kind of crazy rush. So commercial rents have absolutely fallen off a cliff in this city, which I think is good for business. I mean, I think all of these things are good for the whole startup scene. I mean, the rent's coming down on the residential side, commercial side. I think one of the biggest challenges of setting up a company in this city is trying to convince young people, right, who, inevitably the burden of innovation falls heaviest on young people, right, because they have less responsibility, to convince them to join a startup and basically live off a low wage. Any startup at the early stage, the package is always going to be more weighted towards equity, but equity doesn't pay the bills, right? So that is actually one of the biggest challenges by far in terms of setting up shop in this city, which is from an affordability perspective, Hong Kong is the least affordable city on the planet, right? So, I mean, people talk about San Francisco being expensive. Hong Kong is on another level in terms of unaffordability. If you compare median household income to the median price of buying a property. So, Hong Kong, all of these things happening, the prices coming down to a slightly more sustainable level is ultimately, I think, going to help the startup scene in a big way.
How much farther do you think it can drop, though? I mean, it's gone up so much over the past few years that when you talk about a 10 or 20% drop, it's like, well, yeah, but it just quadrupled over the past 8 years or whatever.
Sure. I mean,
it's an exaggeration.
Sure. I mean, look, there aren't too many forced sellers in the market, right? Which means you're not going to see a flood of properties on the market coming down, bringing the prices down. But then, at the same time, over a couple of years, are house prices going to rise faster than inflation? I think no. That's what I think. I think it's kind of going to go sideways for quite a long time now, because the key demand factors aren't going to go away. But at the same time, as you say, a lot of people that own property, they've made a lot of money on it already, so they're not going to necessarily try to dump that. I think it's going to go sideways for a while, which is good because then the gap closes over time.
All right.
Yeah.
Cool. Well, let's open it up for some questions. What questions does the audience have about startup scene, about Spacious, about real estate in Hong Kong? Oh, Vanessa.
So I have two questions. Can I be greedy? Okay, the first question is, I probably should have done my homework, but what is the business model of Spacious? Like, how do you make your revenue. The
Sure.
revenue
Oh yeah, how do you make
stream
money?
is
We forgot that one. We left that out.
or whatever. And the second question is, you mentioned the 3 problem areas, right? One of them was transparency, and like, you know, people like bad pictures, or like unupdated listings. So, you know, how did you change that? Because the same agents are still listing
Sure.
on yours, and so yeah, how did you deal with that?
Sure. Great. I mean, great questions. How we make money? Fundamentally, the people that are posting inventory on the platform, agents, service departments, landlords as well, they are paying us to post. So we're making money from the supply side. We're giving them business, and then on the consumer side, we've also got a couple of things where we've set up partnerships with moving companies, storage companies, where when a searcher comes to our website, we promote complementary services to them. The process of moving involves a lot of different things, right? So there's a lot of opportunities there to help people with different services. So that's how we're making money. We're actually also talking about selling our data to Reuters and Bloomberg. So that's kind of something that we're talking about as well, because they want access to that, right, as market data feed. The second question was about how we... So when you're a new entrant into a market, one of the things that's really difficult to do, especially when you're dealing with a situation where there's kind of a quality control problem, you can't just turn up and mandate procedures, right? Because the guys that you're talking to, they can just say, see you later, I'm just going to use the other guy, right? They don't make me do any of this stuff. So that approach, you know, is not a good one, right? Because you just don't have the bargaining power, right? At some point you can when you're really big, but not when you're small. So the only thing that really works in that kind of situation is to create incentives for people, right? So we basically said to people, if you match a certain quality control criteria, we're gonna promote you, right? And that's something that they pay for on other platforms. So we basically said, we'll promote you for free if people search for specific buildings or specific neighborhoods, if your listings match a specific quality criteria. And you know what, that's worked quite well for us. So I think supply side policies, rather than, you know, enforcing some kind of rules on people, that's what works in that situation.
Related to the business model, I wanted to ask you first if you started charging from the beginning to collect those people who have an apartment and they want to put in your platform, and how you manage to, because you have 2 spectrums, right? You have the people searching for and the ones offering. How did you manage to match those two to have a good offer for each side?
Sure. So I mean, you know, what you're kind of describing is the classic marketplace problem, which is essentially a chicken and the egg, right? People who are searching, they want to go to a place where there's a lot of inventory. People who have inventory, they want to post their inventory on a place where there's a lot of searches. And when you get to a certain point, that's actually the biggest defensible advantage of any marketplace, right? For the next guy to come in and be as useful as you, they've got to have the same inventory and the same number of searches at the same time, right? So it's a difficult problem to solve. The only reason we were able to do it was because the competitors, the product that our competitors had, there were fundamental issues with the user experience and very unhappy consumers. But in an ideal world, if they had actually done a good job of building a good product, we wouldn't have been able to come in. So the only reason we were able to come in was because there was massive dissatisfaction with the guys we were competing against. So to answer the question, there's only really one way to do it, I think, and you've got to be able to curate the inventory, right? So ultimately, when things are working well, you want both sides to be scalable. You want people to come to you and give you inventory without you having to knock on doors, and you want searchers to come to you to find inventory without you having to knock on doors and tell your friends and all this kind of stuff. But at the beginning, you've got to pick one side or the other and say, okay, we're just going to do this bit manually until we get to the point where it can be self-sustaining. So for us, we basically just went to all the real estate agents that we could find and we said, hey, list with us for free. You've got nothing to lose. It's literally free. There's literally nothing to lose for you. So we built that inventory using that inventory, we were able to build a consumer base, right? Because you've actually got something to show to people when they come to the website. And then once the consumer base gets to a certain point, you can go back to the inventory guys and say, hey, time to pay. Because now we're actually giving you real value. Yeah?
Right.
Other questions?
Earlier you said the fundraising side in 2016 is relatively more interesting. So what are these interesting things?
I mean, I think, if in Asia specifically, there's definitely been a little bit of a, shall we say, a wait and see attitude from people since the stock market crash in the summer. So I don't know how many people kind of follow this, but the Chinese stock market crash that took place in the summer, that affected a lot of people in a bad way. Up until that point, it was just, valuations were just off the charts. So since then, I think the environment has been a lot more, I would say, more picky. I think if you're a good startup and you've got something useful to offer and you can show good metrics and you're going to be okay in any situation, right? But if you're a startup which is kind of, I would say, more, shall we say, you know what I'm saying, on the borderline, right? Then it's going to be a lot harder. People are going to be more picky in this kind of situation. So yeah, the stock market crash. But I mean, even in the US, you're seeing a big correction in terms of, I don't know if you saw that LinkedIn had a very big adjustment in their share price. Yeah. So I think globally you're seeing an adjustment in startup prices. But Asia specifically, the Chinese stock market crash has had a very big impact, I think.
So in that case, the Chinese stock market crash, would they not look for other asset type like startups?
No, I think when people lose money, they tend to kind of just hold back. They kind of don't want to invest in anything, basically. But I think on the flip side of that, we're still in a very, very low interest rate environment, right? And that's actually what's really fueled the startup bubble, right? The fact that putting money in a bank account is absolutely worthless. And so the traditional risk-reward equation that would be associated with a startup makes more sense. Because you know what, you're getting literally nothing from putting money in a bank account.
Or negative.
Or negative, yeah. So you may as well put it in a startup, because at least you've got a chance of getting something, even though you might lose it all as well. So I think as long as we have the low interest rate environment, you're going to continue to see support for startup prices, valuations. But what you're not seeing is what I would say huge inflation in prices, which is what you were seeing in 2014 and 2015.
We'll do 2 more questions and then we'll wrap it up. Do we have 2 more?
You're going to let me off the hook?
I wanted to ask you about finding customers, as in searches, I guess.
Yeah.
What sort of process are you using, and what's your experience with that being?
So, I mean, for a business like ours, one of the things that we definitely benefit from is there's a huge search volume in Google around searching for property, right? People search for specific apartments, specific buildings, specific neighborhoods. I mean, there's a term which one of my friends kind of said to me the other day, property porn. I mean, that's definitely something that people are into, right? Just looking for apartments and seeing what they're worth, looking at pictures. So for us, SEO, and that's actually one of the ways I got to know Josh,
Yep.
is a very, very big part of our business. So spending a lot of time on search engine optimization. I've had to teach myself a lot about how to make all of that stuff work. And so that's part of it. I mean, of course, there's a paid advertising side of it as well, but there's a lot of different channels to get people to the business. One of the things that's really great is, we're working on a business and an asset class that the market understands already. We don't have to teach people about what a flat is or a property is. So the demand is already there. We're building a better solution to satisfy that demand. So we're tapping into existing channels of demand. Yeah.
All right. Who wants the final question? Any takers?
Did you have all these other overseas market in mind when you just started?
Absolutely, absolutely. I think you have to. I think if you want to start a business in Hong Kong, you have to do that. I mean, especially when you think about fundraising, it's pretty much impossible to raise money for a startup which is only going to focus on Hong Kong. But Hong Kong is so small in the grand scheme of things. Having said that, it's a great place to start, I think, because if you think about Asia, let me rephrase that. It's a great place to start if you're building a consumer business focused on Asia, because if you think about the various cities in this part of the world, I think you can make a pretty strong argument to say Hong Kong is actually the most diverse city in Asia, from a demographic perspective, from an income perspective, many different ways. If you compare Hong Kong to, say, Singapore or Tokyo or Shanghai, those cities are a lot more homogeneous, right? So to build a solution that can work for Hong Kong, you need to cater for many more use cases, I think. English, Chinese, Android, iOS, high-income users, low-income users. If you can make it work in Hong Kong, then your ability as a product to scale across the region is much, much stronger than, say, if you started a company in Singapore, right? You know, building a business in Singapore and taking that to Bangkok is not easy. Building a business in Hong Kong and taking that to China is not easy, but it's a lot easier, right? So I think Hong Kong is, I think, the best place to start a startup. I think when you make decisions about your product roadmap, when you're building a company, the right way to think about it is, and also keeping in mind that the ultimate value in any startup is in its ability to scale across a large geography, then the first couple of cities and markets that you try to go for, ideally those markets help you to be more scalable, yeah? And then at each round of funding, you're getting bigger, right? So Hong Kong, I think, is a great place to start, but you can never have Hong Kong as the end goal, I think. So for sure, from day one, we always knew we had to go. So all of the infrastructure was built so that we could turn on new cities quickly.
Yeah, it's almost an advantage in a way because you have to think outside of Hong Kong. You
Yeah.
just know that the market's so small that you know you're going to have to grow outside. You can't be lazy that way.
Sure.
Whereas if you start in the U.S. or Europe or Germany or something, you've got this huge market. You could be happy with that
Sure.
for 10 years and then start thinking about internationalization.
Or
But
just
you can't do that here.
Yeah,
Yeah,
exactly.
or just sell. Well, right. Well, thank you so much, Asif. Let's give him a round of applause.